What's up, clan? As you can see today, we're back in our regular setting. Um, this video is going to be interesting. Pretty much what we're going to be looking at is the importance of timing when entering your trades. Oftentimes, people get wicked out a lot, and price, unfortunately, goes their way. They go for a buy, price somehow sells just a little too much, and then it buys, or they go for a sell and price buys just a little too much, hits the stop loss, and then it sells. So we're going to be looking at the importance of timing, and I'm going to share two of my experiences with it. Be sure to watch until the end of the video because we will be going back to our island tips. All right, so we're on TradingView. So this is a gold trade that I took. Well, two gold trades. I believe I took them last week. I will show the proof on my MT5. So at the time, price was here. Let me just pull it. I don't have the action replay, so I'm not able to take off the candles. But right here, you could see gold was selling at the time. So my overall bias was to sell. So this was the price action for the entire week, I would say. Right, so we were bearish. We go down to the 4-hour. Let's jump down to, we're going to jump down to the 30 minutes time frame, and we're going to look at it from there. So when I came on the 30-minute time frame, none of this was visible. So let me just remove this right here. Let me remove this right here. None of this was visible. This is all I saw. So you can clearly see, you can clearly see a structural low right here, right? You could see price break below this particular low, and you could see price leave two fair value gaps, right? We're on the 30-minute time frame. One here, one here. So of course we can clearly see that the fair value gap right here was tapped into, right? So we're moving from PDRA to PDRA. So one, our first excuse to sell would have been one when the daily price was bearish. On the 30-minute at the time when we came in, you had this market structure shift to the downside, price disrespecting this particular low and creating a fair value gap. I saw that price tap back into that fair value gap and melted once again. So when I went down to my 15-minute, when I went down into my 15-minute, I saw this little piece of price action right here, right? This little piece of price action. You have another low, smaller low right here. If we go to our line chart, we could see it nice and clear right here. You have price disrespecting this low and doing what? Creating another fair value gap. When I realized that price did that, I waited for price to come back into the fair value gap, look for the equilibrium of that fair value gap, which basically means the middle point. Price tapped into it, and you could see right after price tapped into it, price fell. However, price did not fall all the way to my take profit, right, at the time, which was an hourly close. So let me just go to the hour and locate it. So this was the hourly close, this swing low right here I was targeting. So you could see price came all the way here, but it did not reach the intended TP, right? So I entered way too early. Of course, my stop loss was above this swing high right here, which created this fair value gap, and of course I got stopped out right here. However, I was determined to get this trade because I realized that price do have an opportunity to sell. But what I did not realize at the time, or I would say maybe not realize, but figuring that price had already tapped into this fair value gap right here. Maybe at the time I thought that this one at the top wasn't necessary. However, when price did come up to this particular fair value gap right here, we could see, mark it off clearly, stretch it across the screen. When price came into that area, I wasn't quick to just hit sell. I looked at price consolidate. So we're going to go to the 15-minute. I looked at price consolidate for a while, right? So they were forming structural lows right here and breaking them, and then price bricked below this one all the way here, and what did they do? They formed another fair value gap. I said, okay, that's fine. I waited for, once again, the equilibrium of the fair value gap, and you could clearly see that price tapped into it somewhere here, and I decided to take my take profit right here, and my stop loss was above this right here. Usually it would be wise to put your stop loss above the swing high, structural swing high, but I had my stop loss right here, right? And that was a 1 to 1.7. So at the end of the day, you have to be patient. You have to be aware of all of the key areas that would present itself on the chart, be it an order block, be it a fair value gap, be it a multiplication block, whatever it may be. You have to be aware, and you have to ensure that price taps into those areas. And when price taps into those areas, you don't just rush. You wait for additional confirmation before you take the trade. If we go to our 4-hour time frame, let me just jump all the way to the side. You can see this just was a 4-hour order block, and had I stayed on the 4-hour, I highly doubt I would have entered here. I could have waited for a simple market structure shift downside, and of course hit my take profit nice and simple. But that was pretty much the conclusion of this video. You have to pay attention to the areas at all times. Don't be fast to jump into trades. Take your time with it. Look at it play out PDRA by PDRA before entering. Cool.